Hello friends, good afternoon everyone. So hope your preparation is going on good. So for your CA intermediate exam, which is tomorrow, and I'm so happy that I have shared already the last minute revision plan, and I wanted to discuss in this particular video so all some important concepts so which are must, and you should definitely cover this before going for the exam. Okay, so that is this particular concepts. So in this first chapter, that is introduction to GST, so we have to remember what are the specific indirect taxes of state government that got subsumed into GST. Total 6 indirect taxes levied by state government got subsumed into GST. So that is, we have this list of VAT, then advertisement tax, luxury tax, entertainment tax, betting tax, purchase tax. So these are the 6 indirect taxes levied by state government that got subsumed into GST. Then indirect taxes levied by local authorities not got subsumed. And India adopted this dual GST model, means both central government and state government can parallelly levy GST on the common tax base. And this model is adopted from Brazil and Canada. And we have Article 279A of the Constitution, which empowers GST Council. GST Council is the decision-making body of GST, and they give recommendations to central government and state government, and it has 33 members. So in this 33 members, we have one union finance minister, one state, like 31 state finance minister, and one union MP in charge of the revenue for union territories. And to take any decision, so there is a weighted majority of 3/4 is required, and there is a quorum of 50% that should be present. And in the central government vote will have 1/3 weight, and state government vote will have 2/3 weight. Then types of GST, we have CGST, SGST, UTGST, IGST, compensation cess. Related to compensation cess, you need to remember that compensation cess is extended up to 31st March 2026. So this can be tested, this point can be tested 31st March 2026. And intra-state versus interstate supply, the difference also you need to know. Location of supplier and place of supply in the same state, so they are same union territory intra. If location of supplier, place of supply is in 2 different states or 2 different union territories, or a state and union territory, it is inter. Now in exam, be careful. If they have given place of supply, you go by that place of supply. At least they should have given intra or inter like that. So you go by the question. If the question is not having any information, then you take location of recipient as the place of supply in case of services, and ending point of the goods as the place of supply in case of goods. Okay, so that is a usual assumption that you need to take. Then zero rated supplies, 2 supplies considered as zero rated, that is export of goods or services, supply of goods or services to SCZ. In case of zero rated supplies, we have 2 options: either pay IGST or don't pay IGST and get the refund. So option 1, pay the IGST and get refund of that IGST. Option 2, don't pay any IGST and get refund of ITC. And whether we pay GST or we are not paying GST, we can avail the ITC with respect to zero rated supplies. Then we have Jammu and Kashmir now divided into 2 union territories. So Jammu and Kashmir, don't consider it as state. It is now considered as 2 union territories: Union Territory of Jammu and Kashmir, Union Territory of Ladakh. And then GST network. So basically GST network can be asked as a short note question. So it provides information technology infrastructure for implementation of GST, and it provides the services to central government, state government, taxpayers, banks, etc. And mainly it facilitates registration, payment of tax, furnishing of returns, then e-way bill and settlement of IGST. So these are the activities that will be done by GST network. And then in supply definition, so supply definition, basically you know everything in that. So but remember what are excluded from the meaning of supply. So what are excluded from meaning of supply is PALD's law, yes, for sovereign. So in the place of exclusion from supply, don't write it as exempted from supply, because there was one question which a student has asked me, sir, transportation of dead body in an ambulance, whether transportation of dead body in an ambulance will be coming under exclusion from supply or exempted supply. It will be coming under exclusion from supply. It should not be written as exempted supply. So that's why you need to know what are excluded from supply. So sovereign functions of government means all activities of government other than Department of Post, transportation of goods or passengers, airport or port, and service to business entities. These 4 activities are covered under supply, and all other activities are excluded from supply. Then government post, constitutional post, and nominated post. So that is also excluded from supply. Then actionable claims other than lottery betting gambling, which means lottery betting gambling is covered under supply and other actionable claims are excluded from supply. Spelled slow, SPAL for legal fee collected by court or tribunal, and then land sale. But remember, land sale always excluded from supply, whether it is a developed land or non-developed land. Land sale is always excluded from supply, but building will be excluded from supply only when the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. Then employee providing services to employer in the course of employment is also excluded from supply. Then the death related, that is funeral, burial, crematorium, mortuary, including transportation of deceased. Then slow in that yes, sale on high seas, that is sale before import. So before import we transfer the document of title to any other person, that is excluded from supply. And liquor license granted by state government, so usually state government will be granting the liquor license for which they get some money, that is also excluded from supply. Then outside the country movement of goods, so originating point of the goods is outside India, ending point of the goods also outside India, there is no GST on that. Then warehoused goods sold under customs, so under customs we import the goods and we deposit in the warehouse, and that warehoused goods when we are selling also there is no supply. So these are the activities which are not treated as supply. Then we need to know what are the activities which are treated as supply even though without consideration, that is 7.1c. Whenever we are writing 7.1c, we need to write read with schedule 1. So what are the 4 activities? DRIP, disposal of business asset on which ITC is availed, related party transaction including transaction between distinct persons, then import of service from a related person or other establishment located outside India, and principal agent transaction. But remember, principal agent transaction only with respect to goods it will become supply, not with respect to services. And that too when the agent is acting on behalf of principal. When the agent is called as acting on behalf of principal, when the agent is raising invoice in his name, then only agent is acting on behalf of principal, then only between principal and agent it will become supply. Then this 7.1AA might also be tested. That is any activity or transaction between a person other than individual and its members. Say for example, partner providing services to the partnership firm and get some consideration. So these services are not remuneration for being a partner, but for some services which he is providing to the partnership firm, that will become supply under 7.1AA. Same way, shareholder providing some service to the company or company providing services to the shareholder, that will also become supply under 7.1AA. And then we have so gifts given by employer to employee not exceeding 50,000. Remember, not exceeding 50,000 per annum per employee. What if it exceeds 50,000? Entirely it will be treated as supply. And then perquisites. Any perquisites which is given by the employer to employee which form part of contract of supply, like contract of employment, that will not be treated as gifts, because it will be coming under salary and it is excluded from supply. And this summary, you know that. And definitions, so quickly, like you just go through these definitions, that too mainly related party definition. Remaining definitions and all normal. And in this donation also you need to remember, conditional donation treated as consideration, it will become supply. Unconditional donation not treated as consideration, and consequently it is not a supply. Conditional donation means against the donation I have an obligation to do something. Unconditional donation means against the donation I don't have obligation to do anything. That is known as unconditional donation. So display of donor name, conditional and unconditional. So mere display of donor name is unconditional donation. But if the donor name is displayed and the donor is getting some business advantage, it is treated like conditional donation and it will be treated as consideration and it will become supply. And then related definition you need to know. So total 9 points are there in related definition. So it might be tested. Such persons are officers or directors of one another's business, and they are legally recognized partners of a firm, and their employer and employee. These 3 points. Then, so 2 companies with a common shareholder holding 25% or more of the outstanding voting stock. Then one of them directly or indirectly controls the other. Basically control is 50%, more than 50%. Then both of them are under the control of a third person. So 2 companies under the common control of a third person. And then 7, 8, 9. So together they control a third person. Individually they are not controlling, but together they control a third person. And they are members of the same family. Family definition you need to know. Spouse and children, whether or not dependent, brothers, sisters, parents, grandparents, if they are wholly and mainly dependent. So that is this. Then sole agent, sole selling agent will always be treated as related. So then next, you need to know even the meaning of aggregate turnover, because some questions will be coined on meaning of aggregate turnover. What will come under aggregate turnover? Everything. Taxable supplies will come, exempted supplies will come, non-taxable supplies will come, zero rated supplies will come. Everything will come in aggregate turnover. And aggregate turnover is always computed on an all India basis and of persons having the same permanent account number. And aggregate turnover excludes inward supplies on which they are liable to pay GST under RCM, and even it excludes the taxes. Remember, in composition scheme, aggregate turnover excludes interest also. But here generally aggregate turnover does not exclude interest, but aggregate turnover only for the purpose of composition scheme excludes interest on loans, advances, deposits. Okay. Then next, GST on sale of flats and buildings, you already know. So only when entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, is excluded from supply. Part consideration before, part consideration after, entirely it will be covered as supply, entire consideration. Then who are treated as distinct person? One registration of a person to their another registration is known as distinct person. And when they are required to obtain more than one registration, if they are having multiple places of business, so within the same state, then they have an option whether to go for separate registration or to go for single registration. But they have multiple places of business in different state with respect to each state from where they make taxable supplies, they need to get registered. And then we have classification of goods. In this classification of goods, what you need to know, simple movable property. If there involves a transfer of title, either at present or at future, it is supply of goods. If there is a transfer of right to use in relation to movable property, it is supply of service. Immovable property will never come under supply of goods, but bringing into existence a immovable property or a transfer of right in relation to immovable property will come under supply of service. Then in case of IPRs, remember, permanent transfer will be supply of goods, temporary transfer will be supply of services. Carrying out process on the goods belonging to other person, where the substantial material required is given by the recipient on which the supplier does the process, it is treated as supply of service. Where the substantial material required is purchased by the supplier and he does the process, then it will be coming under supply of goods. Then next, suppose if there is both supply of goods along with services, three transactions which involves both goods and services will always be treated as services. That is works contract, information technology software, and supply of food. In works contract, there will be supply of goods as well as supply of service in relation to, remember, immovable property. Only in relation to immovable property works contract will be coming. Okay, and it involves both goods and services, but it will always be treated as services. Same way, so information technology software and supply of food, so these two will be treated as supply of service. But apart from this, any other transaction we need to classify based on composite supply, mixed supply. So if the principal supply is goods, entirely it is treated as goods. If the principal supply is service, entirely it is treated as service. If it is composite supply, if it is mixed supply, highest rate is goods, entirely it is goods. If the highest rate is service, entirely it is service. Apart from this, any other activity will be treated as supply of service, doing an act, not doing an act, tolerating an act. Remember, tolerating an act and not doing an act. Consideration receipt for tolerating an act. Example, so fines like damages, when it is collected for breach of contract, will come under consideration for tolerating an act and it will be treated as supply of service. Same way, consideration for not doing an act, non-compete fees, that is also treated as supply of service. Then next, composite supply, mixed supply, simple. So first you need to check three conditions. If all the supplies are taxable, naturally bundled in the ordinary course of business, and the principal supply is identifiable, then it will be treated as composite supply. Don't bother about the price. All are taxable, naturally bundled in the ordinary course of business, principal supply identifiable, it is composite supply. If any one condition is not satisfied, check there is single price or not. If it is single price, then you treat it as mixed supply. And if it is separate prices, it is not a composite supply and the price is separate, then it will be treated as individual supply and taxable accordingly. If it is composite supply, whatever is the rate of principal supply, that will be applied on the entire transaction. If it is mixed supply, so whatever is the highest rate, that will be taken and applied on the entire transaction. And then next, we have 9.3, 9.4 and 9.5. So you need to know what is that 9.5. There are 4 services under 9.5. HATE, housekeeping services, accommodation services, transportation of passengers by any motor vehicle, eating food from the restaurant. In the first two cases, supplier should be unregistered. That is H and A, housekeeping service and accommodation service. But in the next two, T and E, supplier may or may not be registered, but it will always come under 9(5), where liability to pay GST is on e-commerce operator. In this regard, there is one special point: supply of food and restaurant in the specified premises. What is that specified premises? That is in a hotel where the room tariff is greater than, any one room tariff is greater than 7,500 rupees per day. In that hotel, if there is a restaurant and if that restaurant is supplying food through e-commerce operator, it will not come under 9(5). Liability to pay GST is on supplier only. Then 9(4) is inward supply of a promoter or builder, on which GST payable by the promoter or builder under RCM when the promoter or builder is making purchase from a unregistered person. So in case of this 9(4), you need to remember one simple chart. What is that? That is, just check whether it is inward supply of capital goods. Promoter or builder is making purchase of capital goods from a registered person. Yes, ignore it. From an unregistered person, then pay GST under RCM at the rate applicable to capital goods. Then other inputs and input services. Other inputs and input services excludes what? So electricity, TDR, FSI, long-term lease, and motor spirit, diesel and petrol. So the remaining things, 80% should be purchased from a registered person, but in that cement is an exception. Cement should always be purchased from a registered person, otherwise we need to pay GST under RCM at the rate of 28%. If it is any other than cement, suppose if it is 80% purchased from registered person, leave it. So if it is shortfall less than 80%, on that shortfall we need to pay GST at the rate of 18% under RCM. So this point also can be tested in MCQs. Then the list of services which are covered under RCM. So you need to know the list of services alone. First, remember the Sir CG got salads. S for security lending. So in security lending scheme, recipient is the borrower of securities, you need to pay GST. Then I for import of services. R for renting of motor vehicles. In renting of motor vehicles, three conditions are there for RCM. Supplier should be other than body corporate, recipient should be body corporate, and the rate of GST 5%. And another R is renting of residential property. So to whom it should be given on rent? To a registered person, then only it will come under RCM. Then C for copyright services. Copyright, total 4 copyrights are covered: original literary, dramatic, musical, artistic works. But in that original literary, they have an option to pay GST under FCM. So the author can opt to pay GST under FCM. If the author opts to pay GST under FCM for the next 1 year, author only will pay GST under FCM. So that RCM to FCM, no restriction, but FCM to RCM, lock in for 1 year from the date of exercising the option. Then G for GTA services. In case of GTA services also, liability to pay GST is on the consignor or consignee who is paying the freight. But in case of GTA service, again there is an option FCM versus RCM. But the GTA has to select this option for every financial year. So by 15th March of the previous year, they need to select the option whether they want to go for FCM or RCM. If it is FCM, again they have two options. They can pay GST at 12% with ITC or 5% without ITC. And whatever it is, 12% or 5% that they charge to the customer, customer can take ITC. Whereas in case of option to RCM, so recipient is liable to pay GST 5%. Then we have another G, garment services. Garment services to business entity. Generally all services are covered under RCM. Exception is renting of immovable property. Renting of immovable property service provided by government to unregistered business entity will come under FCM. To registered business entity will come under RCM. Otherwise, all services provided by government to business entity will come under RCM. Then overseeing committee services to RBI. RBI will pay GST under RCM. Then TDR, FSI and long-term lease also, promoter or builder will pay GST under RCM. Then sponsorship service condition. The recipient should be body corporate or firm. In sponsorship services, be careful. The one who is paying money is the recipient. The one who is paying sponsorship money is the recipient. So sponsorer is the recipient, and the one who organizes the event is the supplier. If the sponsorer is body corporate or firm, it will come under RCM. Otherwise, it will be FCM. And then we have agent services. Total 5 agents are there under RCM. Insurance agent to insurance company, recovery agent to bank, financial institution or NBFC. And then we have direct selling agent, but direct selling agent should be other than body corporate or firm. To to a banking company, then business facilitator to banking company, agent or business correspondent to business correspondent. And in this regard, remember, business facilitator shall never pay GST. Business facilitator shall never pay GST on their outward supplies and inward supplies. On their outward supplies, so bank will pay. On their inward supplies, the agent will pay. But business correspondent will always pay GST. On their outward supplies also they will pay GST. On their inward supplies also they will only pay GST under RCM. Then legal services provided by individual advocate or firm of advocate to a business entity, including a senior advocate, will come under RCM. So that's business entity will be liable to pay GST. However, we have some exemptions in that regard. Then arbitrator services to business entity also will come under RCM. Then director services to company will come under RCM. But remember, the remuneration paid to the director should not be covered under TDS 192. If the TDS 192 is applied, always it will be salary. On that there is no GST. So if the TDS is under any other section, 194 like that, so then only it will not be treated as salary, and consequently it will become supply, and liability to pay GST is on the company or body corporate. Suppose if the director is not acting in the capacity as a director but in the personal capacity, say director is having one property which he gave on rent to the company, then in that case, so here he will not become a director, he will become a normal person, and normally it should be treated. Then security agency services. Security agency services, we have two conditions. Supplier should be other than body corporate, and the recipient should be registered, but they are not opting for composition scheme or not registered only to deduct TDS. So that is about security agency services. So this is about 93, 94 and 95. And in here one exception was there previously, that is transportation of goods by vessel from outside India to India, where both supplier and recipient are located outside India. That is not applicable now because of the Mohit Minerals case. Supreme Court case is there. So therefore that transaction, suppose if at all it is there in the question, you just mention it as GST not payable. Taxable, the service is taxable, but GST not payable because of the Supreme Court decision in Mohit Minerals case. And then summary of some important circulars. Interstate movement of conveyance. Remember, whenever there is a conveyance that is taken from one distinct person to another distinct person, no need to pay GST on the conveyance, but repairs and maintenance, anything done by one distinct person to another distinct person, that will be treated as supply. And then agent, always agent acting on behalf of principal means agent raising invoice in the name of the agent. So then only agent will be called as acting on behalf of principal. So if the invoice is directly raised with the principal in his name, then the agent is not called as acting on behalf of principal. In case of purchase transaction, the purchase invoice should be in the name of the agent. Then like books, pamphlets, etc. Printing activity. In printing activity, if principal supplies paper, entire it is treated as supply of goods. If the principal supplies treated as printing, then it will be treated as supply of service. So in case of books, brochures, pamphlets, etc., so it will be treated as supply of service. But in case of the tissue paper, letter cards, etc., the principal supplies goods, so therefore that is paper, so therefore it is treated as supply of goods. And bus body building, remember, classified based on principal supply. Rethreading of tire, if the old tire is purchased and supplied rethreaded tire, it is supply of goods. If the old tire is not purchased but on that only if they do rethreading, then it will be supply of services. Priority sector earning certificate, just remember it will be treated as goods and it will be chargeable to GST. And artist, when they are sending artwork to the exhibition, so only when the artwork is actually sold by the art gallery, it will be treated as supply in the hands of the artist. Then tenancy right. Tenancy right, remember, always taxable in the hands of the tenant. Tenancy rights always taxable in the hands of the tenant who is receiving the tenancy rights. But suppose if any amount is shared with the property owner, suppose if the rent of the property is taxable, then even tenancy premium received by the property owner also taxable. If the rent of the property is exempted, then the tenancy premium received by the property owner is exempted. But the tenancy premium received by the tenant will always be taxable. Then next one, no claim bonus, that is a latest amendment, NCB, no claim bonus. No claim bonus will not be treated as consideration, and no claim bonus which is given by the insurance company to the insured should be shown as a reduction in the invoice. So due to that reason, while computing the GST, no claim bonus should be reduced from the premium. Premium minus no claim bonus, on the remaining amount only GST should be computed. Then interest received by the del creditor agent. If the del creditor agent is an agent acting on behalf of principal, then whatever interest that is collected means he is only raising invoice, that will come under interest on account of delay in receipt of consideration, and that interest will be taxable. If the del creditor agent is not acting on behalf of principal, then invoice is raised by the principal, so whatever interest that is collected by the del creditor agent is towards interest on loans, advances, deposits, and it will be exempted. Then in value of supply, mainly at subsidy some point, like subsidy point only, generally it will be pricking, so that we will see. But before that, so we have section 15, subsection 1, which says that value of supply will be transaction value. That is price involved in the transaction. First you take that price involved in the transaction as the transaction value. And remember, 5 inclusions are there. So what are those 5 inclusions? So T, that is taxes, duties and cess by whatever name called other than GST. So other than GST, if there is anything else, you add it only if it is charged by supplier to recipient. And then R, recipient is incurring some expense on behalf of supplier, means it is a liability of the supplier which is incurred by the recipient, you include it. Then number 3, any expenditure incurred by the supplier before or at the time of delivery of goods or before at the time of delivery of services should be included in the value. But if it is incidental expenses, mainly like without incurring that expense, supply cannot be made. If that incidental expense is there, anytime you include. Example, installation. Installation charges, even though after delivery of the goods, it should be included in the value because it is incidental. And then interest. Interest or penalty or late fee for delay in receipt of consideration should be included. In relation to interest, few points we have seen, that is interest is always taxable on receipt base only when it is actually received, and interest in the absence of information in the question should be taken on inclusive basis. And for interest, one debit note will be given by the supplier to the recipient. And then what we have seen is subsidies. So subsidy is divided into 2. Directly into the price, not directly into the price. Not directly into the price means some lump sum amount that is received which is no way connected to the outward supply. So that should be ignored for the purpose of valuation. Whereas if it is directly linked to the price, means subsidy is with respect to every product sold or service rendered, then that is again divided into 2. Subsidy from central government or state government, or subsidy from others. Subsidy from central government or state government, so it is to be excluded, and subsidy from others, it is to be included. Now this is as per the provision. But what we need to do in the question? In the question, there will be 2 types of assumptions or situations that may be possible. So what will happen is that sometimes they will be giving like price after considering the subsidy. So which means in the given price, the given subsidy is already reduced. In the given price, the given subsidy is already reduced. Okay. Now subsidy from central government, state government to be excluded. In the given price, already it is excluded, so ignore. And subsidy from others, so it is to be included. In the given price, it is excluded, so we need to add. This is when the price is after considering subsidy. Price after considering subsidy means while arriving at the given price, the subsidy given in the question is already reduced. Okay. Then price without considering the subsidy means in the given price, the subsidy given in the question is not deducted. Now if it is from CG or SG, it is to be excluded, and in the given price it is not deducted, so you deduct it now. And then suppose if it is subsidy from others, it is to be included. In the given price, it is not deducted, already included, so ignore. So this is the treatment you need to follow. When the question is silent, which assumption we need to take? So if the question is silent, consider the given price after reducing the subsidy given in the question, which means we need to take the given price as there is some original price and the subsidy given in the question has been reduced. That's how we need to assume. Okay. So then exclusion 15 subsection 3. So we have 3 discounts. Discount given before at the time of supply. Discount given before at the time of supply, trade discount, it is always allowed as deduction. If the discount is given after supply, but the terms are agreed before or at the time of supply, so then also it will be allowed as deduction. For that, the supplier is required to give to the recipient a credit note. Because of the credit note, what will happen to the supplier liability? Supplier liability will be reduced. But remember, so only when supplier returns a full amount to the recipient, then only the supplier can give the credit note to the recipient. Means the incidence of tax should not be passed on to the recipient. Full amount should be refunded to the recipient, and the supplier should bear the incidence of tax. Then only supplier can give credit note to the recipient, and because of that, the supplier liability will come down and the recipient has to reverse the ITC. Okay. Then next, suppose if the discount is given after supply and the terms are not agreed before at the time of supply, that discount is not allowed as deduction. And whether GST payable on penal interest on account of non-payment of a EMI. Simple. In that EMI, if the interest is taxable, then penal interest for delay in receipt of EMI also taxable. In that EMI, if the interest is exempted, penal interest for delay in receipt of the EMI is also exempted. For example, housing loan EMI, interest is exempted. For delay in paying EMI, if there is any penal interest, that is also exempted. In case of credit card, interest will be taxable. So credit card, when it is converted into EMI, the interest is taxable. For delay in payment of the EMI, if there is any penal interest charge, that penal interest is also taxable. So these are the points that we have, and then one important point, that is TCS. So TCS under Income Tax Act will not be included in the value. Generally, any taxes, duties, and cess will be included in the value, but not TCS under Income Tax Act, because TCS collected under Income Tax Act is an interim levy not having character of tax, so that should not be included. Then credit note and debit note. So when credit note and debit note will be given, as per section 34, debit note and credit note is always given by supplier to recipient. So whenever there is an increase in the invoice value, then it will be called as debit note. Whenever there is a decrease in invoice value, then it will be called as credit note. And therefore, here what will happen is that debit note don't have any time limit, so it can be given any time. Because of issuing debit note, what will happen to the liability of the supplier? Liability of the supplier will increase. And what will happen to the recipient? Recipient can take the ITC. Whenever credit note is given, is there any time limit? Yes. There are 5 similar time limits that you need to remember. Time limit for issuance of credit note, time limit for availment of ITC, time limit for rectification of GSTR1, time limit for rectification of GSTR3B, and time limit for rectification of GSTR8. GSTR1 is a return of outward supply, GSTR3B is a consolidated return, and GSTR8 is a return to be filed by TCS deductor, e-commerce operator. So in these 5 cases, the time limit is common. 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. So that is the time limit here for issuing the credit note. So whenever credit note is given, what will happen to the liability of the supplier? Supplier liability will be reduced and recipient ITC also will be reduced. Suppose if the recipient is not having enough balance in the ITC, then he need to pay. Reversal of ITC means reducing the balance of ITC. Then we have this invoice and time of supply. In this, first we need to understand what is the due date of invoice, because due date of invoice, without knowing due date of invoice, we will not be able to arrive at the time of supply. So that's why due date of invoice we need to know. Due date of invoice, only 6 points we have. Normal cases, goods normal cases. If supply involves movement of goods at the time of removal, if supply does not involve movement of goods at the time of delivery. And next, continuous supply of goods. Continuous supply of goods means there will be successive supply of goods for which payments are settled on a periodical basis. So we need to check if the payments are received based on account statement. Means, so account statement, the amount is mentioned in the account statement. For the amount mentioned in the account statement date will be taken as the due date of invoice. But the amounts are receivable irrespective of the account statement, then the payment received will be taken as the due date of invoice. Then in case of sale on approval or on return basis, so within 6 months from the date of removal, the buyer should approve. If the buyer is not approving within 6 months, on expiry of 6 months, it is deemed that the buyer has approved. So therefore, the due date of invoice will be 6 months from the date of removal or date of acceptance by the buyer, whichever is earlier will be taken. Then in case of services, normal cases, if it is banking and insurance services, 45 days from the date of completion. If it is any other service, 30 days from the date of completion. Then continuous supply of service, meaning you need to know a service which takes more than 3 months to complete, and involves periodic payment obligations. Both should be there. Service should take more than 3 months to complete and it should involve installments, then it will be called as a continuous supply of service. In case of continuous supply of services, we need to check whether the due date is ascertainable from the contract. If the due date is ascertainable from the contract, take the due date of the contract itself as the due date of invoice. Suppose if the due date of payment is not ascertainable from the contract, but the payment is linked to completion of an event, so whenever the event is actually completed, that should be taken as the due date of invoice. Suppose if the due date of installment is not ascertainable and the payment is not linked to completion of event, whenever the amount is actually received, that date should be taken as the due date of invoice. Then cessation of service. Cessation of service means one, abruptly stopping the service. In case of cessation of service, immediately upon cessation, the invoice needs to be given. Next, whether details of recipient should be mentioned in the invoice. So we have B2B versus B2C. So B2B, definitely the name, address and GSTN of the recipient needs to be entered, whatever may be the value. But if it is B2C, if it is more than 50,000, definitely we need to enter the name, address of the recipient. GSTN will not be there because recipient is unregistered. So name, address of the recipient including the address of delivery should be given. But in case of B2C, where the value is less than 50,000, so in case of two services, that is supply of services through e-commerce operator and OIDR services, OIDR supplier, in these two cases, they need to enter the name, address of recipient along with PIN code. But in other cases, recipient details not required to be entered. Only if the recipient is asking, they need to enter the details of the recipient, otherwise not required. So this is an amendment and this point can be tested. Then, time of supply in case of goods or services. So we have section 12, so deals with time of supply in case of goods, and 13 in case of time of supply services. So total 7 points you need to remember. First, time of supply in case of goods under FCM. So due date of invoice or actual date of invoice, whichever is earlier. And in case of a person opting for composition scheme, due date of invoice or actual date of invoice or date of payment, whichever is earlier. So that should be taken. And which means that GST not payable on advances in case of goods covered under FCM. Then in case of goods covered under RCM, we need to take date on which goods are received by the recipient, date on which payment is made to the supplier, or 31st day from the date of invoice, whichever is earlier. Whereas in case of number 4, services under FCM, check whether invoice is given within the due date. If invoice is given within the due date, invoice date or payment date, whichever is earlier. If invoice is not given within due date, or then completion date or payment date, whichever is earlier, should be taken. And therefore, whether GST payable on advances in case of services covered under FCM, yes. And in case of RCM services, it is date on which payment is made to supplier or 61st day. Instead of 31st day, it should be taken as 61st day from the date of invoice. Then subsection 4, vouchers. Vouchers divided into two: identifiable voucher, non-identifiable voucher. Identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption. When time of supply is not ascertainable as per any of the above provisions, are they required to file any periodical returns or not? You need to check. Yes, they are required to file periodical returns. The due date of that return will be taken as the time of supply. They are not required to file any periodical returns. So then we need to take the date of payment of GST itself as the time of supply. Then last, interest late fee penalty. Already we know that interest is taxable on receipt basis. So only when that interest is actually received on the date, only the time of supply will arise. Then we have in this additional points, so this up to 1,000 rupees in case of services, invoice or payment, whichever is earlier. Suppose if some advance is received up to 1,000 rupees in excess of the invoice this month, for that either we need to take normal provision, that is invoice date or payment date, whichever is earlier, or as and when the invoice is issued for this excess amount in future, at that time will be taken as the time of supply. And what will be considered as the date of payment? So usually date of payment from supplier point of view, it is date of entry into books or date of credit in his bank account, whichever is earlier. From recipient point of view, date of entry in the books of recipient or date of debit in their bank account, whichever is earlier. Then this point, associated enterprises. Generally import of service is RCM. So therefore 13 subsection 3 will come, that is the date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. But if it is import of services from us by associated enterprises, so then we need to take date on which payment is made to supplier or date of entry in the books of the recipient, whichever is earlier, should be taken. If it is associated enterprise, who are associated enterprises? Just remember, one company holding more than 26% in the other company will become associated enterprises as per Income Tax Act, not 25, 26. Then next one, when goods are taken outside India for exhibition, it is not a supply. And if the goods are not returned within 6 months from the date it is taken for exhibition, then 31 subsection 7, sale on approval or on return basis will come and it will become supply. And then we have various documents. Tax invoice, generally tax invoice is given by supplier to recipient, but if the transaction is RCM and the supplier is unregistered and the recipient is registered, recipient will give the tax invoice to the supplier. Okay. Then bill of supply. In case of exempted goods or services or a person opting for composition scheme, the name of the document is bill of supply. And invoice cum bill of supply when they are making both taxable and exempted supplies in a single transaction to unregistered person, they will be giving single invoice cum bill of supply. Then in case of low value supplies, low value supply means value of supply less than 200. So tax invoice or bill of supply not required if 3 conditions are satisfied. Condition number 1, the recipient should be unregistered, B2C supply. Condition number 2, recipient do not require tax invoice. Condition number 3, a consolidated tax invoice should be prepared at the end of the day. However, this low value supply relaxation is not applicable in case of a multiplex theatre. So even if the value is less than 200 rupees, multiplex theatre should issue invoice that is taken as e-ticket, will be taken as the invoice in that case. Then debit note, credit note, already we know. Revised tax invoice. So whenever I am liable to get registered and I make application for registration within 30 days from the date I am liable to get registered, from the date I am liable to get registered till the date I got the certificate of registration, I can give the revised tax invoices for the supplies during that period within 1 month. What is the time limit for giving revised tax invoice? 1 month from the date of registration. But remember here, if the registration application is not made within 30 days from the date when they are liable to get registered, revised tax invoice cannot be issued. In this regard, you need to know what is the effective date of registration. So if the application is made within 30 days, the date on which they are liable to register is the effective date of registration. If the application is not made within 30 days from the date they are liable to register, then the date on which they got the registration certificate, that will be taken as the effective date of registration. And then receipt voucher. So receipt voucher is a document that is given by supplier to recipient when? So whenever supplier receives an advance, what is called as advance? Any amount that is received before preparing invoice is known as advance. So in case of advance, supplier will be giving a receipt voucher to the recipient evidencing receipt of advance. And then payment voucher. Payment voucher is given by recipient to supplier. That is in case of transaction covered under RCM. So whenever recipient makes payment to the supplier, recipient has to give this document payment voucher to the supplier. And then refund voucher. So whenever advance is received and for which receipt voucher is given to the recipient, thereafter the supply is cancelled, invoice is not yet prepared, then the name of the document given by supplier to recipient is refund voucher. Then delivery challan, in case of movement of goods without involving any supply, that is goods sent on job work or goods taken from one place to another place for which they have not obtained separate registration, etc. In that case, that good should accompany a document called as delivery challan. And receipt voucher versus refund voucher, that is before the date of invoice if the payment is received. If the payment is received before the date of invoice, then receipt voucher should be given by supplier to recipient. Supplier shall issue a receipt voucher. But if the payment is received after the date of invoice, receipt voucher may or may not be issued. And in case of advances, that is whenever the payment is received before the date of invoice, in case of advances for goods, GST not payable, but for services GST will be payable. And suppose if the payment, if the amount is refunded before the date of invoice itself, if the amount is refunded, so then the name of the document will be refund voucher. And can the supplier claim the refund of GST paid? Yes. Suppose if the amount is refunded after the date of invoice, then the name of the document will be credit note. But as the credit note has a time limit, so then what if credit note cannot be issued? The alternative to credit note is refund. Suppose if I am not able to issue credit note to you, then I will be able to get refund from the government. Then next, HSN. HSN code, how many digits should be entered in the invoice? So if it is like aggregate turnover during previous year does not exceed 5 crores, so then for B2B 4 digits needs to be entered, not for B2C. If the aggregate turnover during the previous year exceeds 5 crores, then with respect to B2B or B2C they need to enter 6 digits. For services it is called a service accounting code, and service accounting code is always a 6-digit number. Then e-invoice. So generally it can be asked as a short note question, what is e-invoice? E-invoice refers to uploading invoice in the invoice registration portal and obtaining 3 things: invoice reference number, QR code and digital signature. So then it will be called as a e-invoice. Okay. And so when e-invoice will be applicable? Only in case of B2B supplies e-invoice will be applicable, and if aggregate turnover during any preceding previous year from 2017-18 so does not exceed 10 crores, then e-invoice not applicable. So if it exceeds 10 crores, then only e-invoice is applicable. So any previous year from 17-18, if the aggregate turnover exceeds 10 crores, then e-invoice is applicable. For B2B supplies. For B2C supplies, it is called as dynamic QR code, and when it is applicable, if aggregate turnover during any previous year from 17-18 exceeds 500 crores, so then we have dynamic QR code that will be applicable. And here e-invoice and dynamic QR code is not applicable in few cases. So e-invoice is not applicable in case of biggest. So B for banking company, I for insurance company, and G for goods transport agency, another G for government department or local authority, E for exhibition of film in a multiplex theater, S for SEZ unit, and T for transportation of passengers any mode. So this is the case where e-invoice is not applicable. When dynamic QR code is not applicable, so even if the turnover exceeds the specified limit, but this e-invoice or dynamic QR code is not applicable. Dynamic QR code, you remember big toe, BIGG same, B for banking company, I for insurance company, G for GT, another G for government department or local authority, then T for transportation of passenger, O for so OIDR supplier, and E for exhibition of film in a multiplex theater. And so suppose if a bank or a insurance company etc., only with respect to their transactions e-invoice applicable, e-invoice not applicable, or any transaction carried out by them e-invoice is not applicable, any transaction carried out by them, so e-invoice not applicable, because these are the cases where e-invoice is not applicable. So that is one circular that has been provided. Then we have input tax credit. Input tax credit. So first we need to understand how much ITC can be taken. So we need to take only matched ITC. What is called as matched ITC? So first we need to take whatever is the ITC reflected in GSTR 2B of a person. So only self-assessed ITC can be taken in GSTR 3B. What is self-assessed ITC? That is first ITC as per 2B. For this ITC as per 2B, we need to make 6 adjustments. So we need to add 3 things and we need to less 3 things. What are the 3 things that we need to less? Blocked ITC we need to reduce and used for non-business purpose and exempted supplies. Then 3 things we need to add. that is whatever GST we paid under RCM and re-availment of ITC reversed earlier. Already we availed ITC and we reversed it, and again we are re-availing it, so we don't have to check with 2B. And then ITC pertaining to a particular month, not availed in that month but we are availing now, then also you don't have to check with 2B, you can take this ITC. So these are the adjustments we need to make, and that is called as ITC availed in GSTR 3B. So what is 2B? Supplier will report the details in outward supply GSTR1. So whatever details reported by supplier in GSTR1 and filed by the due date, those data will be made available to the recipient in GSTR2B. That is only called as matched ITC. As per section 41, only matched ITC can be availed. Then section 41 read with rule 37A. So here we have, suppose if supplier reports the invoice in GSTR1, so and it is filed, automatically it will be reflected in GSTR2B of the recipient, and recipient based on that can avail the ITC in his 3B. Now supplier did not file 3B by September 30th of the next financial year. This can be definitely be tested. By September 30th of the next financial year, supplier has not filed GSTR 3B. Then what recipient has to do? Recipient should reverse the ITC after September 30th and before November 30th. So of the next financial year, and they need to also pay interest in terms of 50 subsection 3. What is the interest under section 50 subsection 3? On account of availment of ITC, so we need to compute the interest on the availed and utilized ITC, not on the availed ITC but on the utilized ITC at the rate of 18% from the date of utilization till the date of reversal. Now thereafter again supplier filed GSTR 3B. Can the recipient so re-avail the ITC reversed earlier? Yes. So but the interest cannot be re-availed. So this is about section 41 read with rule 37A. Then the manner of utilization of credit. So we have to remember 4 principles. Principle number 1. So there is no restriction with respect to IGST, which means that IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. Between other, that is CGST, SGST and UTGST, respective credit should be utilized for payment of respective liability. And then principle number 2, priority. First I have IGST credit. IGST credit, what I should do? I should first use it for payment of IGST payable, and thereafter CGST, SGST or UTGST in any manner, any proportion. Then I have CGST credit. What should I do? First I should use it for payment of CGST payable, and thereafter for payment of IGST. And SGST credit, first I need to use it for payment of SGST payable and thereafter IGST. UTGST also same. And then third principle is that, so before utilizing CGST and SGST credit, the credit of IGST should be exhausted. Principle number 4, I have to pay IGST liability. First I will use IGST credit, thereafter CGST credit, and thereafter SGST or UTGST credit. GST compensations can be availed as ITC and utilized only for payment of GST compensations. So whenever you are utilizing IGST credit for payment of CGST, SGST liability, ensure that you are utilizing it in the same ratio of the liability, so that the ITCs whatever is there will not get wasted. So you ensure that the ITCs is not get wasted. CGST, SGST will have some ITC, so that should not get wasted. So optimum utilization you need to do. Then section 16, conditions for availment of ITC. Total 8 conditions are there. Only a registered person can avail ITC, and the inward supplies on which ITC availed should be used or intended to be used in the course or furtherance of business. And the recipient should be in possession of tax paid document. What is considered as a tax paid document? Tax invoice or debit note or ISD invoice. ISD invoice means input service distributor invoice or bill of entry. These are the various tax paid documents that should be in possession. Then fourth condition, recipient should have actually received the goods or services. Fifth, supplier should furnish the details in GSTR1. And supplier should have paid the tax with respect to such supply by September 30th of the next financial year. That's what we studied in rule 37A. And recipient should have filed the returns in GSTR 3B, and whatever ITC that is reflected in GSTR 2B of the recipient should not be restricted. So then next, so there are some minimum contents that should be there in the invoice so that we can take ITC. What are those minimum contents? GSTN of the supplier, GSTN of the recipient, then description of the goods, value of the goods, tax and place of supply in case of interstate supply. If these minimum details are there in the invoice, that can be called as a valid invoice for availment of ITC. Then deemed delivery, when goods are delivered to some other person on behalf of the recipient, So the day on which the third person has received the goods, the recipient has received the goods. Same is applicable for services. So bill to ship to transaction. We are raising bill to one person and we have delivered the goods or services to some other person. The day on which the goods or services are received by some other person, it is deemed that the billing address has received the goods or services, and the billing address can take ITC with respect to this. In case of goods received in lots or installments, only with respect to a single invoice, when the goods are received in lots or installments, only on receipt of last lot or installment ITC can be availed. Then there is reversal of ITC, like recipient not making payment to supplier within 180 days from the date of invoice. Then in that case, whatever is ITC that is availed by the recipient needs to be reversed along with interest at 18% from the date of utilization till the date of reversal. But this 180 days condition is not applicable in case of number 1. So whenever the transaction is covered under RCM. Number 2, when the supply is under 71C without consideration. Number 3, payment made to some other person on behalf of supplier under 15(2)(b). In these 3 cases, this 180 days condition is not applicable. Again, as and when after 180 days the payment is made, accordingly we can re-avail. What if proportionate payment is made within 180 days? So then the remaining portion only ITC needs to be reversed. Then depreciation 16 subsection 3, whenever we compute the depreciation under Income Tax Act section 32 by including the GST component also, then the GST cannot be taken as credit, because already on the depreciation has been computed. For example, capital goods is 10 lakhs and GST 1,20,000. If depreciation is computed on 11,20,000, this 1,20,000 cannot be taken as ITC. Then time limit for availment of ITC, same 30th November of the succeeding financial year or date of filing and return, whichever is earlier. And remember, for re-availment of ITC reversed earlier, so this time limit is not applicable. Then 17.1, 17.2, 17.3 talks about apportionment of ITC. So 3 simple points. If inward supply is used for taxable supply, we can take ITC. If inward supply is used for exempted supply, we cannot take ITC. If inward supply is partly used for taxable, partly used for exempted, we can take proportionate ITC. Same way, inward supply used for non-business purpose, we cannot take ITC. Inward supply used for business purpose, we can take ITC. Inward supply used for partly business, partly non-business, we can take proportionate ITC. How to take proportionate ITC? It will be given in the question itself. In case of business and non-business, in case of exempted and taxable, you take the turnover ratio. Whatever is the exempted turnover of that month and taxable turnover of that month, accordingly proportionate ITC will be taken. Then meaning of exempted supply for the purpose of ITC means while computing the ITC, what are considered as exempted supply? You remember, number 1, so notified as exempted. Number 2, nil rated. Number 3, non-taxable. This is usually exempted. Apart from that, sale of land, sale of building, sale of securities, these 3. And thereafter, supply covered under RCM. So these are the 7 transactions which will be treated as exempted supplies. And here, in case of land and building, we need to take stamp duty value. In case of securities, 1% of sale value should be taken as the value. And then, in case of interest on loans, advances, deposits, even though it is exempted for payment of GST, but while computing ITC, it should be considered as taxable for a person other than bank, financial institution and NBFC. And then, so in case of bank, financial institution and NBFC, there are 2 options. Option number 1, proportionate ITC they will take. Option number 2, ad hoc ITC. Ad hoc ITC means flat 50% of the eligible ITC they will be taken. But in case of inward supply from a distinct person, they can take full ITC. There is no restriction of 50%. But in case of others, 50% only they can take. And they need to exercise this option in the beginning of the financial year, and that option will be applicable throughout the financial year. Then blocked credits. Blocked credits, we have 3: motor vehicle related blocked credit, construction related block credit, and other block credit. Motor vehicle block credit, motor vehicles are divided into 3. Motor vehicles for transportation of persons, vessels and aircrafts, and other motor vehicles. Other motor vehicles, ITC always available, there is no restriction. And motor vehicles for transportation of persons, capacity does not exceed 13 and capacity exceeds 13. If capacity exceeds 13, ITC available. If capacity does not exceed 13, ITC not available, but 3 exceptions are there. If it is for further supply and used in the business of transportation of passengers or driving schools, then ITC available. Then vessels and aircrafts, ITC not available. But we have 4 exceptions where ITC available. Further supply used in the business of transportation of passengers, imparting driving schools, and used for transportation of goods. In these 4 cases, ITC is available. And then 4 services in relation to motor vehicle. repair and maintenance, insurance service, servicing and hiring, renting and leasing of motor vehicles. These 4 service in relation to motor vehicles. If ITC available on the motor vehicles, on this 4 service also ITC available. If ITC not available on motor vehicles, and on this 4 service also ITC not available. And then construction related block credit. So we have any service received, works, contract, service and goods purchased or received in relation to construction of an immovable property is blocked credit. However, 3 exceptions we have. Exception number 1, this restriction is only to the owner of the property, not to the supplier. If supplier receives any goods or services for construction, he can take ITC. Second exception is that plant and machinery. Suppose if it is for construction of plant and machinery, ITC available, but plant and machinery excludes telecommunication towers and pipelines laid outside factory gate. And then if construction expenditure is charged to P&L, not capitalized but charged to P&L, even then ITC is available. And then other blocked credits. Membership of a club, health and fitness center is a block credit. We have only one exception, that is if it is under a statutory obligation incurred by employer to employee. Then travel benefits extended to employees on vacation is a block credit, but exception again, statutory obligation incurred by employer to employee. Then non-resident taxable person who is coming from outside India to India and is not having any fixed place of business in India is called as a non-resident taxable person. This NRTP cannot take ITC on anything except on import of the goods made by him. Then food and beverages, outdoor catering, beauty treatment, insurance, health insurance, life insurance services, and then hiring, renting and leasing of motor vehicles. So these are the list of block credits. For these 3 exceptions we have. Number 1, inward supply, outward supply in the same category. Number 2, inward supply part of outward supply. Number 3, incurred by employer to employer under a statutory obligation. So then balance, whenever we are making purchase from a person opting for composition scheme, we cannot take ITC because first of all the person opting for composition scheme will not charge GST to us. And whenever goods purchased and used for personal consumption, ITC not available. Whenever the goods purchased are lost, stolen, written off, destroyed or distributed as gifts or free samples, ITC not available. Remember, if the distribution of gifts or free samples becomes supply, if the distribution of that gifts or free samples becomes supply, then we can take ITC with respect to this. And then section 18. In section 18 subsection 1 talks about availment of ITC on closing stock. Total 4 cases we can avail the ITC on closing stock. 18(1)(a), I am liable to get registered and I make application for registration within 30 days. Voluntarily I am getting registered, or I am migrating from composition scheme to normal scheme, or my outward supplies which was exempted now became taxable. So in these 4 cases we can take ITC on closing stock. So what is the common closing stock? Inputs as such held in stock, inputs in the form of WIP held in stock, inputs in the form of finished goods held in stock. Okay. Whereas on capital goods also ITC can be taken, in which case, in case of 18(1)(c) and 18(1)(d), on capital goods also ITC can be taken. Then one more difference between 18(1)(a)(1)(b) versus 1(c)(1)(d) is that matching is not required in case of 1(a)(1)(b), but matching is required in case of 1(c)(1)(d), and 1(a)(1)(b) is now only you are getting registered, but in case of 1(c)(1)(d), you are already a registered person. Okay, and then what is the time limit within which this closing stock should have been purchased? Within 1 year prior. And in case of inputs, whatever GST paid, you can take as ITC, but capital goods full ITC cannot be taken. We need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. So we need to reduce and remaining to be taken. How to take this ITC? One form needs to be filed, that is ITC 01. So total 3 forms you need to remember. Form GST ITC 1 for availment of ITC on closing stock. Form GST ITC 2 and 2A for transfer of ITC from one person to another person. Form GST ITC 3 for reversal of ITC on closing stock. So this ITC 1 form should be filed within 30 days from the date when they are eligible. In case of 18(1)(a)(1)(b), whenever they got registration, 1(c)(1)(d), whenever they get converted from there within 30 days or extended time. And this should be certified by a CA-CMA if the claim of ITC exceeds 2 lakhs. Otherwise it is under a self-declaration. Then 18 subsection 3, transfer of ITC. So whenever there is a transfer of business, so transfer of business with a specific provision for transfer of liabilities. So from the transferor, unutilized ITC will be transferred to the transferee, for which transferor will be required to file one form, that is ITC 2. In case of merger, both entities gets merged into single entity, so both entities will transfer the ITCs. But in case of demerger, so it will be transferred in the ratio of assets of the demerged units, it will be transferred. And here CA-CMA certificate is required to prove that this transfer of business is with specific provision for transfer of liabilities. Then 18 subsection 4 read with 29 subsection 5. So whenever a person is under normal scheme and going into composition scheme, or whenever the taxable supplies of the person becomes exempted, or whenever there is a cancellation of registration, in these three cases, so they need to reverse the ITC on closing stock. That is input as such held in stock, input in the form of WIP, input in the form of FG and capital goods. In case of these inputs as such held in stock, inputs in WIP, inputs in FG, whatever ITC they have availed, that they will reverse. But in case of capital goods, ITC availed divided by 60 months, because the life of the capital goods is taken as 60 months, into balance life, whatever is there, that should be reversed. Okay, and then 18 subsection 6, in case when I have purchased some capital goods, at the time of purchase of capital goods I have availed the ITC. So now that capital goods is sold, so the GST payable will be ITC availed minus 5% for every quarter or part thereof from the date of invoice till the date of sale, or GST on sale value, whichever is higher. But this section is not applicable in case of jigs and fixtures, molds and dies and refractory bricks sold as scrap. In that case we need to take the normal sale value, should be taken in that case. So that is about input tax credit chapter. Then registration, if you see, in registration mainly you need to remember the threshold limit. So this is where many students get confused. So threshold limit, first if you are doing business in single state, check whether it is MMTN, Manipur, Mizoram, Tripura, Nagaland. If it is Manipur, Mizoram, Tripura, Nagaland, so then the limit will be 10 lakhs. And then use stamp state. In case of use stamp state, Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry, it will be 20 lakhs always. If it is other states, if you are exclusively engaged in supply of goods, then it will be 40 lakhs. Or if you are engaged in supply of both goods and services, then it will be 20 lakhs. This is when, if you are doing business only in one state. If a person is doing business in multiple states, what they need to do? One of the state is a special category state and taxable supplies are made from the state. Means one of the state is in MMTN and taxable supplies are made from that state, then the limit will be 10 lakhs. If none of the states, out of the given states, none of the state is in MMTN use stamp and they are exclusively engaged in supply of goods, then it will be 40 lakhs. Balancing figure, it will be 20 lakhs. And remember, this 40 lakhs limit is not applicable if there is a person engaged in making supply of ice cream, edibilized tobacco products, then bricks and roofing tiles. In case of composition scheme also we have this list, extra one more product we have, that is aerated waters. In case of composition scheme, manufacturer of those notified goods cannot opt for composition scheme. Here supplier of these notified goods, either manufacturer or a trader, cannot get the 40 lakhs threshold limit. Then next section 23 talks about who is exempted from registration. So section 22 says whenever aggregate turnover of a person exceeds threshold limit, they need to register. Section 23, irrespective of that, so section 23, they are exempted from registration. Number 1, if they are exclusively making exempted supplies. Number 2, if they are exclusively making non-taxable supplies. Number 3, if they are exclusively making supplies covered under RCM and the agriculturist, then they are exempted from registration. Compulsory registration, you remember the keyword I creations. I for interstate supply of goods, not services, only goods. Interstate supply of goods other than handicrafts. C for casual taxable person who come from outside the state to this state and other than handicraft. Suppose if there is an interstate supplier making handicrafts or casual taxable person making handicrafts, they are not compulsorily required to get registered. They are required to get registered only when aggregate turnover exceeds threshold limit. Then R for recipient who is liable to pay GST under RCM. Then E for e-commerce operator liable to pay GST under 9 subsection 4, e-commerce operator liable to deduct TCS. A for agent making supply on behalf of principal, CREAT. T for TDS deductor. I input service distributor. O for OIDR supplier located outside India and making supply to non-taxable online recipient in India, and N for non-resident taxable person, NRTP, and S for supplier of goods through e-commerce operator. So these people are compulsorily required to get registered. But remember, section 23 overrides section 24. If a person is exempted from registration, they are exempted from registration. Don't apply section 24 in that case. Then section 25 talks about procedure for registration. Remember few forms here. So REG1 application for registration, REG2 acknowledgement, REG3 notice, and REG4 reply to the notice, REG5 rejection of application, and REG6 certificate of registration. So what is the time limit within which So notice or registration to be given. Once we make application for registration within 7 working days, either notice to be given or we need to give certificate of registration, otherwise it is deemed to be registration granted. And suppose if they give a notice and thereafter we need to give reply to the notice within 7 working days, and after giving reply to the notice within 7 working days, thereafter within 7 working days, either they need to cancel the registration by rejecting the application, or they need to give certificate of registration. Suppose if neither rejection of application nor certificate of registration, then also registration is deemed to have been granted. And remember, application for registration should be made within 30 days from the date they are liable to get registered. And bank details needs to be furnished at the time of registration, and we can submit it later also. Suppose if we are submitting the bank details later, there is a time limit. The time limit is important. 45 days from the date of registration or due date of filing 3B, whichever is earlier. 45 days from the date of registration or due date of filing 3B, whichever is earlier. Then this above registration procedure is not applicable to not you. N for non-resident taxable person, not you. Remember, not you. So this procedure is not applicable to not you. N for non-resident taxable person, O for OIDR supplier, T for TDS TCS deductor, U for UIN holder. Then Aadhaar authentication is required, and once we opt for Aadhaar authentication, it should be completed within 15 days from the date when we have selected Aadhaar authentication. Suppose if you are not completing Aadhaar authentication within 15 days from the date of submission of that form, then it is deemed that on expiry of 15 days, we have submitted the form without Aadhaar authentication. What will happen when the form is submitted without Aadhaar authentication? Physical verification will be carried out by the officer within 30 days from the date of application, and then only they will be granting the registration certificate. And then in this regard, you need to remember this deemed registration. What is that? Aadhaar authentication is opted. We selected Aadhaar authentication. Okay, no, we have not selected. Then the date when we submit application, within 30 days, the registration should be granted. Otherwise, registration deemed to have been granted. Then Aadhaar authentication opted. Yes, I have opted for Aadhaar authentication. Whether the Aadhaar authentication is completed within 15 days? No, not completed. Then on expiry of 15 days, from there within 30 days. So after 15 days plus 30 days, okay. If registration is not granted, then also it is deemed registration. Aadhaar authentication opted, and it is completed within 15 days. But, okay, but you know what has happened? Based on risk parameters, department is of the opinion that it requires site verification even after completion of Aadhaar authentication. So then in that case, within 30 days from the date of application, they need to complete physical verification and grant registration, otherwise it is deemed registration. Suppose if Aadhaar authentication is opted, Aadhaar authentication is completed within 15 days, and based on risk parameters require site verification, no, then from the date when we make application within 7 working days, so they need to grant, otherwise registration is deemed to be granted. So Aadhaar authentication opted, completed, but a notice is issued, and we gave a reply to the notice within 7 working days. Thereafter, within 7 working days, if they are not granting registration, then also it is deemed to be registered. So total 5 cases there is deemed registration. 1, 2, 3, 4, 5. So this can be tested as a short note question. And then special provisions relating to CTP and NRTP. A casual taxable person and a non-resident taxable person should make application for registration at least 5 days before commencement of the business, and the registration that is granted to them will be a temporary registration which will be valid for a period up to 90 days. If they want to extend it further, it can be extended for a further period not exceeding 90 days, which means in total time it will be 180 days. And they have to deposit the advance tax at the time when they make application for registration with respect to their estimated net tax liability. So whatever advance tax that they have deposited, that will be there in the cash ledger and which can be adjusted against their liability. If there is any shortfall, they need to pay. If there is any excess, they will get the refund. So difference between CTP and NRTP. CTP is a person who comes from outside the state to this state occasionally and is engaged in making supply of goods or service and is not having any fixed place of business in this state, whereas NRTP will come from other state, other country to this country and is not having any fixed place of business in this country and is engaged in supply of goods or services. And usually NRTP will have a permanent account number, so they will get a normal registration, but that is CTP. NRTP will not have a permanent account number, so using their passport, the registration will be done, and CTP registration will be normal REG1, NRTP will be REG9. And CTP will file the regular returns GSTR1 and 3B, whereas NRTP will file a return in GSTR5. Then section 28, amendment in registration. So whenever there is changes in core fields and non-core fields, so amendment in registration will happen. What are considered as core field? Change in name, change in address, and change in top management. Change in name, change in address, and change in top management is known as core field. And any change in the core field is subject to approval by the proper officer. But apart from that, any other change is known as non-core field. Change in bank details, change in mobile number, change in email ID, etc. and all. So whenever the application is made, automatically it will be updated in the portal. And here, whenever there is a change in constitution that requires change in permanent account number, it is not called as amendment, because once permanent account number itself changes, they need to go for new registration only, and they cannot make application for amendment in registration. What is the procedure for that? First, they need to file a form in REG 14 within 15 days. Remember, within 15 days, they need to file a form in REG 14, and thereafter, so a notice will be given to them in REG 3 within 15 days, and thereafter, so they have to give reply to the notice within 7 working days, and thereafter within 7 working days, either they will accept or reject the application. If they accept, they will pass the amendment order. Then cancellation of registration, section 29. As per section 29, there are total 8 cases that leads to cancellation of registration. Number 1, a person change in constitution, that is if they have transferred the business or discontinued the business, or change in constitution requiring change in permanent account number, no longer liable to be registered, or registration obtained by way of fraud, etc., or registration has been obtained voluntarily but not commenced business within 6 months, and then contravention of certain provisions of the act or rules, and composition scheme person annual return not filed within 3 months after a due date, normal scheme person not filed returns for consecutive 6 months or 2 quarters. These are the 8 cases where the registration of a person will be cancelled. In that, the first 3 cases, either the person can make application for cancellation of registration, or the officer can suo motu initiate cancellation of registration. But in the next 5 cases, so a proper officer will initiate cancellation of registration. Then, what are the contravention of provisions that leads to cancellation of registration? So total 7 points you need to remember in this case. First 3, wrong address, wrong invoice, wrong ITC, not doing business from the place where they have obtained registration, or issues invoice in contravention of the provisions, or avail ITC in contravention of the provisions. And then 3 violations: violation of furnishing bank details, violation of payment of 1% of liability through cash ledger as per 86B, or violation of anti-profiteering provisions. And then if their liability in GSTR 1 is greater than GSTR 3B, or the ITC they have availed more in their 3B than the 2B, so for 1 or more tax periods, so then also that will be a case for cancellation of registration. So whenever department initiates cancellation of registration, or the registered person make application for cancellation, first the registration of that person may be suspended. So suspension is not mandatory, suspension is optional at the discretion of the officer. Okay. So then next we have what is the period of suspension. So whenever the application is made by the registered person, the date selected by the registered person, or the date mentioned in the application, whichever is later, till the date of conclusion of proceedings. And suppose if cancellation is initiated by the officer, he will select one date. From that date till conclusion of cancellation proceedings, the registration will be suspended. Here one amendment is there. During the period of suspension, if we file our returns, actually they suspend our registration because of non-filing of returns. Suppose if you file the returns during this period, so during the period of suspension, we cannot file the returns of suspension period, but we can file the returns of the period previous period. Suppose if we file the returns, an automatic revocation of suspension. Then once the cancellation order is passed, thereafter we can make application for revocation of cancellation. What is the time limit within which we need to make application for revocation of cancellation? Within 30 days from the date of cancellation order. It can be extended for a further period of 30 days by additional of joint commissioner, and further period of 30 days by commissioner. And then we have composition scheme. So there are 2 composition schemes: composition scheme under section 10(1) and composition scheme under section 10(2)(a). So composition scheme under 10(1) is applicable to manufacturer, trader, and restaurant service, that is supply of food service provider. But composition scheme under 10(2)(a) is applicable to manufacturer, trader, or any service provider. And in case of composition scheme under 10(1), a person can opt for the composition scheme if their aggregate turnover during the preceding previous year does not exceed 150 lakhs. In case of 8 states, it will be taken as 75 lakhs. What are those 8 states? MMTN, so USAM, MMTN, USAM, for which Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya, it will be taken as 75 lakhs. And then for 10-2A, if aggregate turnover during the previous year does not exceed 50 lakhs, they can go for composition scheme. And benefit of reduced rates. In case of 10-1, for manufacturer, the rate will be 0.5 CGST, 0.5 SGST on total turnover. For trader, it is 0.5 CGST. Trader or any other services. So 0.5% CGST, 0.5% SGST on taxable turnover. And in case of restaurant service provider, 2.5% CGST, 2.5% SGST on total turnover. But in case of 10-2A, always it will be 3% CGST and 3% SGST on total turnover. Current year limit for the reduced rate is same. Current year up to 1.5 crores or 50 lakhs, 75 lakhs, they will be into composition scheme, and thereafter they will go into normal scheme. And there are some non-applicability of this composition scheme, that is S9 RCM. So S9 RCM, yes for supply of services. So in case of 10-1, only restaurant service. So other than restaurant service or beyond 10% limit, a person who is under composition scheme 10-1 can provide services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. To that extent they can provide service. If they provide beyond that, they cannot continue in the composition scheme. Then N for non-resident taxable person, I for interstate supply of goods or services, and then non-taxable supplies, then E for e-commerce operator, R for RCM under 9.4. So whenever a person is required to pay GST under 9.4 but not paid, they cannot go for composition scheme. And C for casual taxable person, M for manufacturer of notified goods. What are those notified goods? So ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters and bricks and roofing tiles. Then what is the meaning of aggregate turnover? Here we have 3 turnovers. So those 3 turnovers meaning is important. So we will come across 3 turnovers in composition scheme. Aggregate turnover for determining the eligibility to opt for composition scheme. Regular aggregate turnover only. That is taxable supplies, exempted supplies, zero rated supplies, non-taxable, everything will come. And 2 things are excluded. Inward supply under RCM, and we have taxes, that is excluded. But one more is also excluded, that is interest on loans, advances, deposits will be excluded, and pre-registration turnover will be included. So before getting registered, they will have some turnover that should be taken. Then second one is turnover for computing 10% limit of services. So here also it is ditto, same as aggregate turnover, except that aggregate turnover is computed on all India basis. This will be computed state wise or union territory wise. Thereafter, turnover on which GST payable under composition scheme. So we need to take current year turnover. It will be computed state wise or union territory wise. Here you should not have non-taxable supplies. You should not have interstate supplies, because if you have non-taxable supplies and interstate supplies, that is a disqualification. But you can have other, and in this the pre-registration turnover will be excluded, because pre-registration turnover will not be counted for the purpose of payment of GST. So that's why that should be excluded. On the remaining turnover, composition scheme tax will be payable. So that is about the turnover points here. And then next, these are the important areas. Then in exemptions we have agriculture related services. So in agriculture related services, so many students have messaged me, sir, storage of sugarcane, is it taxable or exempted? See, first, if it is an agricultural produce, its storage is always exempted, because any service in relation to agriculture or agricultural produce is exempted. What is agricultural produce? The primary produce out of agriculture on which no further processing is done. So fruits, vegetables, sugar cane, all these will come under agricultural produce. So storage of this agricultural produce is exempted. Okay. So any service in relation to agriculture or agricultural produce is exempted. And agriculture means what? Cultivation of plants and rearing of all livestock from animals other than horses. For what purpose? Food, fiber, fuel, raw material, or any other similar products. Agricultural produce means a primary produce out of agriculture on which no further processing is done, or such processing as is usually done by a cultivator which does not alter its essential characteristics. And rice is not an agricultural produce, but for rice we have few activities, that is loading, unloading, packing, storage or warehousing of rice is exempted. Same way, artificial insemination of livestock is exempted. Service by way of storage and warehousing of cereals and pulses is exempted. Cereals and pulses is not agricultural produce, but its storage is exempted. Then what about this omitted? See, in this, if agricultural produce is already there, then it is covered under the first point itself and it is exempted. Then warehousing of minor forest produce. Minor forest produce is not agricultural produce, so that's why it is separately given as exemption. Then that's what I have given. Warehousing of fruits, vegetables and other agricultural produce is covered in one above. Then second, pension services. There are two pension schemes which are exempted: Atal Pension Yojana and any state government operated pension. Apart from this, any other pension will be taxable. Then banking and other financial services. So RBI, any service provided by RBI or any service provided to RBI will be taxable. We don't have any exemption. Then transaction in money divided into two. Transaction in money for a separate consideration, without consideration. Transaction in money without consideration, neither goods nor services. Transaction in money for a separate consideration, it will be treated as service. Check whether consideration is represented by way of interest or discount. If the consideration is interest or discount, then it is exempted. If it is any other consideration, then it will be taxable under FCM. Then, so there is a banking company which is providing service to basic savings deposit account holders under Pradhana Mantri Jan Dhan Yojana. Then whatever money collected from them, that will be exempted. Then foreign exchange transactions between banks, between forex dealers, between banks and forex dealers is exempted. Between banks or forex dealers and customers will only be taxable. Then there is an acquiring bank which will be collecting the processing charges. So if the transaction is up to 2,000 rupees, then on that processing charges will be levied. That processing charges is exempted. If the transaction amount is more than 2,000 rupees, on that processing charges will be levied. That processing charges will be chargeable to GST. And then business facilitator or business correspondent or agent of business facilitator or agent of business correspondent earning commission from the rural area is exempted. They don't have to pay GST. And then healthcare services, we have only two exemptions. That is healthcare service by a clinical establishment, authorized medical practitioner, paramedics, including ambulance services. Same way healthcare service in relation to animals or birds. Only these two are exempted. Then room charges, previously entirely exempted, but now room charges, if it is ICU charges, fully it is exempted. If it is any other normal room charges, if the room charges per day does not exceed 5,000 per day, then it is exempted. If the charges exceeds 5,000 rupees per day, then it will be entirely taxable. Then what is the meaning of healthcare service? Healthcare service means pre-treatment, that is diagnosis, treatment or care in any recognized system of medicine for any disease, illness, injury, pregnancy. But healthcare service does not include three: cosmetic surgery, plastic surgery and hair transplantation. But these three also will come under healthcare service if these are carried out to restore the anatomy of body parts affected due to congenital defects, developmental abnormalities, injury or trauma. Then it will come under healthcare services. Then renting of room to inpatient, like supply of food to the inpatients, will be exempted, but outpatients will be taxable. Same way, so services provided by consulting doctors to hospitals is also exempted. Then, so there's a ART or IVF. ART or IVF for people who are not blessed with kids, the treatment is provided. The treatment is a healthcare service and it is exempted. Then rehab professionals who are working in education institutions or medical establishments is exempted. But if they are working in rehab centers, that rehab center should be owned by government or trust, then only it is exempted. Otherwise, if it is a private rehab center, then it will be taxable. Then when it comes to entry tickets, there are few entry tickets which are exempted irrespective of the ticket price. There are few entry tickets which are exempted only if the ticket price does not exceed 500. So irrespective of the ticket price, we have museum, wildlife sanctuary, tiger reserve, zoo, and entry to protected monuments. So this, and then so museum, wildlife sanctuary, tiger reserve, national park, zoo, and entry to protected monuments. Whereas in case of this, if the ticket price does not exceed 500, so we have certain performance related, that is theatrical performance, dance and musical performance and concert. Then events, that is circus and page and beauty show, sporting event and award function and even planetarium. So these are certain cases which are exempted if the ticket price does not exceed 500. Then service by specified organizations, we have ESIC, Employee State Insurance Corporation, EPFO, Employee Provident Fund Organization, NCCCD, National Center for Cold Chain Development, Foreign Diplomatic Mission located in India, and Coal Mine Provident Fund Organization and NPS. These are some specified organization. Any service provided by them will be exempted, and in this SEBI and IRDA is now omitted. So services provided by them will be taxable. Insurance services, service of life insurance. So just remember national pension system. That national pension system, whatever money collected towards insurance is exempted. Same way there is a group life insurance. Group life insurance by Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. The premium collected is exempted. Then there is a general insurance business provided under government schemes. So that is exempted. And then life insurance under government schemes also exempted. Apart from that, micro life insurance. But remember, where the sum assured does not exceed 2 lakhs. Then insurance service provided to government is exempted. Then all these services, its reinsurance is also exempted. Then business facilitator or business correspondent working for insurance company in rural area is exempted. Then charitable and religious services. So there is a charitable trust under 12A or 12AB. Only few activities are considered as charitable activities. Number 1, public health. Number 2, advancement of religion, spirituality and yoga. Number 3, educational programs to orphans, physically, mentally disabled persons or traumatized persons or prisoners and persons over 65 years residing in rural area, and environmental preservation. These are the 4 charitable activities. Any money collected towards these 4 charitable activities is exempted. Then number 2, services by an old age home run by central government, state government, charitable trust under 12AA or 12AB, provided they are providing the old age home for people who are aged 60 years or more against consideration up to 25,000 rupees per month per member. So then it will be exempted. Okay, but remember 25,000 only. If it goes beyond 25,000, then it will be taxable. Then services by any person by way of conduct of religious ceremony. Example, Purohit, money collected is exempted. Same way, religious pilgrimage, Kailash, Manasarovar and Hajj Yatra only by specified organizations is exempted. Then education services, services provided by an education institution to its students, faculty and staff is exempted. And services provided to education institution. So service provided by an education institution, so to its student, faculty, staff is exempted. And education institution category 1 up to 12th standard, category 2 education for obtaining a qualification recognized by law, category 3 approved vocational education. And then service provided to education institution, transportation, security and housekeeping, and then catering. Then these 3 in relation to category 1 is only exempted. Then admission to or conduct of examination, all 3 category institutions exempted. Online periodicals and journals only for category 2 it will be exempted. And then entrance exam fee collected by the education institution is exempted. And there is training providers under DDUGKY scheme, so money collected by them is exempted. Then National Skill Development Corporation, Sector Skill Council, assessment agent or training partner getting money is exempted. And then we have training in recreational activities relating to arts and culture. So but it should be only by an individual, then only exempted. If it is sports, it should be by a charitable trust. Then services by assessment bodies under skill development initiative scheme is exempted. Then services provided by government, service provided by government, 4 activities are covered under supply and other activities are excluded from supply. 4 activities are Department of Post, transportation of goods or passengers, services to aircraft or vessel in the port or airport, or services to business entities. These are the 4 activities covered under supply and other activities excluded from supply. In this Department of Post, we have 3 exemptions. That is postcard, inland letter and envelopes less than 10 grams is exempted. All other cases it will be taxable. So then transportation of passengers, we need to refer the transportation chart. Then services to airport or port, services by airport or port will be always taxable. Services provided to business entities divided into 2 specific exemptions, general exemptions and other cases. Other cases it will be taxable, specific exemptions. So we have total 14 specific exemptions, charges under RTA, Right to Information Act. Then interdepartmental service, one department to another department. Then right to use telecom spectrum assigned before 1/4/2016, both one-time charges and annual royalty. Right to use natural resources allocated before 1/4/2016, only one-time charges. Right to use natural resources to an individual farmer. Merchant overtime charges under customs. And then safety certificate charges, consideration for tolerating an act. So safety certificate charges and consideration for tolerating an act. Thereafter share of profit petroleum. So profit petroleum means a joint venture between government and the leaseholder, wherein out of the profit generated by extracting the petroleum or natural gas, a portion will be taken by the government as profit. That portion taken by the government as profit is known as profit petroleum, that is exempted. Registration charges under any law for the time being in force. Fee for birth certificate, death certificate, driving license, visa, passport. Guarantee commission for guaranteeing the loans taken by PSU. Then ERCC, excess royalty collection contractor to the extent of variable royalty. So then suppose if the fixed royalty is more than the variable royalty, on the difference ERCC is required to pay GST. Then for granting national permit to goods carriage to operate throughout India. So these are the 14 specific exemptions. and 2 general exemptions. First general exemption is services other than renting of immobile property provided to a business entity. That business entity turnover during the previous year does not exceed threshold limit, then it is exempted. Or suppose if services are provided to business entity where the value of supply does not exceed 5,000, then also it will be exempted. And in other cases it will be taxable. Next, we have renting. So in case of renting of movable property, only for renting of motor vehicles is exempted. Renting of motor vehicle that can carry more than 12 passengers to State Road Transport Corporation, renting of motor vehicle to a GTA, and renting of electric motor vehicle that can carry more than 12 passengers to local authority, renting of bus to a person who in turn provides transportation service to education institution up to 12th standard. These are the 4 exemptions. Then immobile property land upfront charges including preferential location charges for long-term lease. Long-term lease means lease for a period more than or equals to 30 years. And then building, in case of building only 1 exemption, renting of residential property for residential purpose to unregistered person is only exempted. If it is to registered person, it will be taxable, and registered individual for personal stay, family stay is also exempted. That is an amendment. Then renting of precincts of a religious place meant for general public, and it should be registered as a trust. If it is for accommodation purpose, less than 1,000 will be exempted. If it is hall, marriage hall, etc., less than 10,000 exempted. If it is for shop, less than 10,000 per month is exempted. And then sports related services, you need to remember first. So sponsorship money collected by recognized sports body is fully exempted. Unrecognized sports body will be taxable. And wherever it is taxable, if the recipient is body, corporate or firm, it will come under RCM. And if the recipient is other than body, corporate or firm, it will come under FCM. Then the second exemption, what you need to remember is that services provided by individual as a player, referee, umpire, coach or team manager to recognize sports body is exempted, and all other people will be taxable, like commentators, selectors, etc. will be taxable. Same way, service provided by one recognized sports body to another recognized sports body is exempted. Then there is an unincorporated association. That unincorporated association provides services to their members. If that unincorporated association is a trade union and they collect membership fees from their members, it is exempted. Suppose if it is for providing exempted service, then also it is exempted. As a resident welfare association, apartment owners association, maintenance charges is exempted if the maintenance charges does not exceed 7,500 per month per member. Suppose if it is industrial or agricultural labor organization, it is exempted irrespective of any amount. So trade union, industrial or agricultural labor union exempted irrespective of any amount, but it is, if it is resident welfare association, does not exceed 7,500 rupees per month per member. If it is any other entity, so then it will be up to 1,000 rupees per annum, per member per annum. Suppose in case of resident welfare association, if it exceeds 7,500, entirely it will be taxable. Then transportation of passengers. In case of transportation of passengers, 4 modes: railways, airways, waterways and roadways. In case of railways, we have 2 exemptions, that is other than first class or any AC, it is exempted. Then general, sleeper, then metro, mono and tramway is exempted. Then airways, we have 2 exemptions again. That is, if the starting point or ending point is in economy class in northeastern states or Bagdogra and West Bengal, or consideration received by airlines towards viability gap funding from government for a period of 3 years. Then in case of waterways, also 2 exemptions: inland waterways, coastal waters within India. Coastal waters means seaways within India, specified goods. Coastal waters within India for other than tourism purpose, means public transportation. And roadways, so roadways we have 3 exemptions: non-AC stage carriage. Stage carriage means which stops at every stage of the journey. Non-AC contract carriage other than for tourism or hire, okay. And then meter cab or auto rickshaw. These are the 3 cases which is exempted: non-AC stage carriage, non-AC contract carriage other than tourism or hire, meter cab or auto rickshaw. But if these 3 through an e-commerce operator, it will become taxable. And then transportation of goods. In case of railways, specified goods. This specified goods comes in 3 places: railways, specified goods; waterways, also coastal water specified goods; and GT also we have specified goods. What are those specified goods? So that specified goods is total 6: agricultural produce, food grains including flours, milk, pulses and salt, organic manure, newspaper and magazines, defense and military equipment, relief material for natural and man-made disaster. these 6 specified goods, if transported by railways, exempted. If transported by coastal waters within India, exempted. And if transported by GTA, also exempted. Then airways, only one exemption. Transportation of goods by airways from outside India to India is exempted, and waterways, inland waters, and this coastal water specified goods. Roadways, other than GTA or courier, everything else is exempted. And GTA, we have 3 exemptions only: specified goods, and if the recipient is central government, state government, or local authority registered only to direct TDS, if the recipient is individual, HUF or AJP, all are unregistered and not having factory. So then we have import of services. Import of service divided into 2: OIDR services other than OIDR services. OIDR service always taxable. If it is imported by non-taxable online recipient, it will be taxable under FCM. If it is imported by other than non-taxable online recipient, it will be taxable under RCM. If it is other than OIDR service imported by non-taxable recipient, exempted. Other than non-taxable recipient will be taxable. Who is a non-taxable online recipient? So non-taxable online recipient is any unregistered person importing service for other than business or commerce. Who will come under non-taxable recipient 3? Individual, trust, government, importing for personal purpose or charitable activities or other than business or commerce. And then construction services, construction of an individual house otherwise than as a part of complex is exempted. But construction, repair, alteration of government projects, that is Housing for All Mission or Pradhan Mantri Awas Yojana, is exempted. Then whenever we are selling flat, that includes value of land, so 1/3 of the gross value of flat is exempted towards the undivided share of land. Whenever there is transfer of development rights, TDR, FSI and long-term lease, we have a proportionate exemption with respect to residential units. So first we need to see value of inward supply of TDR, FSI, long-term lease into 18% into, so proportionate of residential units booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area of the flats in the project. For example, value of inward supply is 10 lakhs, excluding GST 18%. So GST on inward supply is 1,80,000. Out of this total area 28,000 square feet. So how many are residential units booked before completion certificate? So total area 50,000 square feet, 28,000 is residential area booked before completion certificate. Means how much is exempted? 1,18,000 to 28,000 divided by 50,000. So 1,800,000 is exempted, remaining GST will be payable. Then advocate services. In case of advocate services, individual advocate or firm of advocate, we have 4 exemptions. If they provide services to a person other than business entity, then it is exempted. If they provide service to another individual advocate or firm of advocate, exempted. If they provide services to central government, state government or local authority, exempted. If they provide services to a business entity whose turnover during previous year does not exceed threshold limit, it is exempted. Apart from this, for any other case, it will be taxable, and wherever it is taxable, liability to pay GST is on recipient, that is business entity. And same way, in case of senior advocate, we have 3 exemptions. Senior advocate or arbitrator providing service to a person other than business entity, exempted. If they provide service to central government, state government, local authority, exempted. If they provide service to a business entity whose turnover during previous year does not exceed threshold limit, exempted. Other case, it will be taxable. Also, one special point you remember, whenever senior advocate is providing service to individual advocate or firm of advocate, that individual advocate or firm of advocate is not the recipient, but the ultimate litigant, applicant or petitioner will be taken as a recipient, and accordingly we need to determine the taxability. Then exemptions under IGST Act: if both supplier of service and recipient of service is located outside India, everything else is exempted. Every transaction is exempted. And now this transportation of goods by vessel is not applicable because of the Supreme Court case. And then, so there is a tour operator. The tour operator is in India, who is providing tour operator service to a foreign tourist in relation to tour wholly conducted outside India. That is also exempted. What if the tour is partly in India, partly outside India? Proportionately it is exempted. To what extent? Total consideration into number of days tour outside India divided by total number of days, or total consideration into 50%, whichever is lower is exempted. Suppose if the time spent is greater than or equals to 12 hours, it should be considered as full day. If the time is less than, that is number of days outside India divided by total number of days. If the time spent is more than or equals to 12 hours, it should be taken as 1 day. If it is less than 12 hours, it should be taken as half day. Then there is an intermediary who is located in India, supplier of goods outside India, recipient of goods outside India. The intermediary is in India. The intermediary gets some money, that will be exempted. So then miscellaneous exempted services. So transfer of going concern as a whole or independent part thereof. So that is like I am transferring the business as a whole. Now whatever money that I am getting, I don't have to pay GST on that. Then supply of service associated with transit cargo to Nepal and Bhutan. So transit cargo to Nepal and Bhutan, both to and from, is covered under exemption. Service by way of collecting or providing news by independent journalists, Press Trust of India or United News of India, exempted. Then there are public libraries which will collect some lending charges, exempted. Then there is an organizer of business exhibition who is organizing the exhibition outside India, exempted. Then public convenience such as bathroom, lavatories, exempted. Then service by way of access to road or bridge by way of toll charges. Toll charges is taxable, including overloading charges and extra charges for not having FASTag. Everything will be taxable. Everything will be exempted. But here, payment of annuity of toll charges is now omitted, which means it will become taxable. Generally, toll charges, overloading charges, everything will be exempted. But this payment of annuity for toll charges will become taxable now. Then, so there is a performance artist who performs in folk or classical art form of music, dance or theatre, where the consideration charge is up to 1,50,000 per performance. So excluding service provided by such artist as a brand ambassador. Suppose if the artist is acting as a brand ambassador, then it will be taxable whatever may be the amount. And satellite launch services will be always taxable. Satellite launch services will always be exempted, whomsoever provides it, whether it is by ISRO or Antrix Corporation or New Space India Limited. And then this liquidated damages related circular, you remember, that is liquidated damages. Suppose if it is mere compensation to compensate the loss or damage, then it will not be treated as consideration. Ignore. Suppose if it is specified in the contract as per commercial terms, and if it is like charges to discourage a person, then again it is not treated as consideration. If it is other cases, it will be treated as consideration, and the taxability depends upon principal supply. So that is about the exemptions, all important exemptions points that we have seen. Then we have payment process. In this payment process, you need to know that there are 3 ledgers. As per section 49, there are 3 ledgers that will be maintained by registered, on behalf of every registered person. 3 ledgers are maintained by GST network: electronic liability ledger, electronic credit ledger and electronic cash ledger. Whatever balance that is there in the cash ledger can be used for payment of tax, dues and other dues. But whatever balance that is there in the credit ledger can be used only for payment of tax dues. And the total dues of a person will be divided into 5: TIPFO, tax, interest, penalty, fee and others. Interest is for delay in payment of tax. Penalty is on account of breach of provisions, and fees is late fee and others. Okay, how money will come into the credit ledger whenever we avail the ITC through 3B or ITC 1, 2 or 2A, or any refund that will come into credit ledger? How money will come into cash ledger whenever we are making deposit into the cash ledger through challan or TDS, TCS deducted or refunds, that will come into cash ledger. So the outflow of the credit ledger and cash ledger is the inflow to the liability ledger, and electronic liability ledger is PMT1, credit ledger is PMT2 and cash ledger is PMT3. Whatever balance that is there in the credit ledger or cash ledger can be claimed as refund. If there is any discrepancy in the ledgers, that will be communicated to the department in PMT4. And special points with respect to cash ledger: what are the modes of deposit? So internet banking, debit card, credit card, NEFT, RTGS, over the counter cash deposit up to 10,000 rupees in a tax period. Now we have extra to UPI and IMPS. Then whenever payment is debited in the bank account but not reflected in the electronic cash ledger, so then we have to communicate it in PMT7. Then for transfer of balance from one cell to another cell in the cash ledger, we use PMT9. Even for transfer of balance in cash ledger from one distinct person to another distinct person also, we use PMT9. Then electronic credit ledger, whenever we have excess balance in the credit ledger, we will get it as a refund only in 2 cases. That is zero rated supplies and inverted tax structure. Inverted tax structure means tax rate on outward supply is less than the tax rate on inward supply. Then refund to the original source ledger. That is for a particular month, if we have paid tax wrongly or in excess, then when we are getting the refund, so it will get proportionately into the respective ledger. From whichever ledger we have used, from that ledger only, like to that ledger only it will come in the proportion. Then next, whenever a person claims the refund of ITC and that is erroneous, when he returns that money to the government, so then his electronic credit ledger will be recredited. For that, proper officer will pass a order in PMT 3A. Then Rule 86A. Rule 86A and Rule 86B is the restriction of utilization of balance in the electronic credit ledger. 5 cases as per Rule 86A. So balance in electronic credit ledger will be suspended for a period of 1 year. If registered, like supplier is not existent or not doing business from the place where they have obtained registration. Recipient is not in existence or not doing business from the place where they have obtained registration. Or ITC has been availed without receiving the goods or services, or the invoice is missing, or the supplier has not paid the tax to the government. In these 5 cases, whatever ITC that is already availed by the recipient will be suspended for a maximum period of 1 year. And then upon expiry of 1 year, they can re-avail that credit. That is, they can utilize it for their liability. Rule 86B is like, whenever turnover in a particular month exceeds 50 lakhs, they have to pay 1% of their liability through cash ledger. Means they can use only 99% of their liability from credit ledger, even if there is sufficient balance in the credit ledger. What is taken as turnover for computing this? Taxable turnover, that is excludes exempted, non-taxable, zero rated, only taxable turnover should be taken. And this 86B is not applicable in case of government and its family, that is government department, public sector undertaking, local authority, statutory body, and even if they have paid more than 1 lakh as income tax in the 2 preceding previous years, or received a refund of unutilized ITC greater than 1 lakh and paid cumulatively more than 1% of the total liability in cash ledger so far in the up to the current month. Then section 50, interest on account of delayed payment of tax. There are 3 situations where the interest will be applicable. Situation 1, delay in filing 3B. Situation 2, invoice not reported in GSTR1 and 3B of a month but paid in another month. Situation 3, ITC wrongly availed and utilized. In case of first situation, in all 3 situations, interest rate is same. But in the first case, interest at the rate of 18% from the first date after due date till the actual date. Here also from the first date after due date till the actual date. But for ITC, from the first date after utilization of ITC till the date of reversal. So whenever we utilize, from the date after the date till the date of reversal. And in case when there is a delay in filing 3B, interest is computed on net liability, not on gross liability. So means total gross liability minus input tax credit on net liability will be computed. Suppose if invoice not reported in a particular month but paid in the another month, then interest will be computed on the gross liability. Whereas in case of ITC wrongly availed and utilized, interest is computed only on the ITC utilized. What is the meaning of ITC utilized? That month in which the balance in ITC falls below wrongly availed ITC. Balance in ITC falls below availed ITC. So that is known as utilized ITC. So there only it will be computed. Here, what is the meaning of date of payment? Either the actual date of payment, actual date of filing 3B. And here also actual date of filing 3B, if payment is through DRC3, date of filing such form. Here, what is taken as the date of utilization? Actual date of 3B or due date of 3B, whichever is earlier, with respect to the month in which balance in ITC falls below the wrongly availed ITC. So this is about interest computation that we have. Section 50, then returns under GST. In this returns under GST, you need to know few returns. GSTR1. GSTR1 is a return related to outward supply. Who will be required to file this GSTR1? Every registered person by when? 11th of the month following every month if they are not under QRMP. QRMP is quarterly return monthly payment. If they are under QRMP, 13th of the month following every quarter. And IFF is invoice furnishing facility. For first 2 months in the quarter, if they are under QRMP, they need to file this IFF by 13th of the month following every month. GSTR 3B is a return related to summary return related to all details: inward supply, outward supply, gross liability, input tax credit, everything. And what is the time limit? 20th of the month following every month. Okay, so it is QRMP not opted. If QRMP is opted, then it will be 22nd of the month following every quarter or 24th of the month following every quarter. So to whom it is 22nd? Remember, for states G, M, C, A and below, Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh, GMC and states below that, it will be 22nd. For other states, it will be 24th. Then CMP 8 is a statement, challan to be filed by composition scheme dealer. Statement to be filed by person opting for composition scheme, and the time limit is 18th of the month following every quarter. GSTR 4 is an annual return to be filed by a person, and that is composition scheme, by 30th April of the succeeding financial year. GSTR 5 is a return to be filed by NRTP, that is 13th of the month following every month or 7 days from expiry of registration, whichever is earlier. This point can be tested in exam. 13th of the month following every month or 7 days from expiry of registration, whichever is earlier. Then GSTR 5A is a return to be filed by OIDR supplier by 20th of the month following every month. GSTR 6 is a return for input service distributor who takes the credit and distributes the credit, that is 13th of the month following every month. TDS and TCS, GSTR 7 is TDS, GSTR 8 is TCS by 10th of the month following every month. GSTR 9 is an annual return to be filed by every registered person whose aggregate turnover exceeds 2 crores. So whenever their turnover exceeds, aggregate turnover exceeds 2 crores, they need to file annual return. Whenever their aggregate turnover exceeds 5 crores, they need to file even reconciliation statement. Remember, when aggregate turnover exceeds 5 crore, only reconciliation statement. What is the time limit for this annual return or reconciliation statement? 31st December of the succeeding financial year. GSTR 10 is a final return to be filed by a person at the time of cancellation of their registration. So what is the time limit? 3 months from the date of cancellation or the date on which they got the order of cancellation, whichever is later, not earlier, whichever is later. Remember, whichever is later. Then GSTR 11 is the details of inward supply to be filed by UIN holder. UIN is unique identification number holder at the time of filing refund claim. And then we have this section 38. Section 38 is important for exam as a short note question. What is section 38 is that, so supplier will file GSTR 1 and will mention our name as the recipient. So it will come in our 2B. But there are few cases, ITC, even though supplier file GSTR 1, it will come in 2B under ITC not available. When ITC will be restricted in 2B, that is, if the supplier is a newly registered business, or if the supplier liability in GSTR 1 greater than 3B, okay, or if supplier filed GSTR 1 but not filed 3B, or supplier ITC in 3B is greater than his 2B, or supplier has received the demand notices and the default continues, and the supplier has defaulted in payment of 1% of liability through cash ledger as per 86B. In these cases, even though supplier files GSTR 1 and reports our invoices, but in 2B it will be restricted. So this can be tested as a short note question. And then we have rule 88C. What is this rule 88C? Whenever liability in GSTR 1 exceeds liability in 3B by a prescribed amount or prescribed percentage, then so an intimation will come in the common portal to us. So means what, we would have added more invoices in GSTR 1, but that much invoices we have not paid in 3B. So then we will get an intimation in the common portal within 7 days. Either we should agree and pay along with interest, otherwise we need to give the proper explanation as to why there is a difference. Suppose we have agreed and paid, or proper explanation is given and it is acceptable by the department, okay, proceedings are concluded. Suppose we have not paid, not even given explanation, or we gave the explanation but the department is not satisfied, then in that case they will initiate recovery. Whatever is the difference, whatever liability, say liability reported in GSTR 1 is 15 lakhs, but the liability paid in 3B is 10 lakhs, so that 5 lakhs they will recover along with interest, and even GSTR 1 will be blocked till the time they recover this money from us, so we cannot file the GSTR 1, so for the subsequent periods. Then persons who are not required to file GSTR 1 or GSTR 3B. So who is not required to file GSTR 1 or 3B? Remember, tonic. In the tonic T square, TDS, TCS deductor, OIDR supplier, non-resident taxable person, input service distributor, and composition scheme taxpayer. These people are not required to file GSTR 1 or 3B. Then, who are not required to file annual return? Remember, CAG tonic. CAG, people whose books of accounts are subject to audit by CAG, and then TDS deductor, OIDR supplier, N same non-resident taxable person, I input service distributor, C for not composition scheme, casual taxable person. Then in 3 cases, returns can be filed through SMS, GSTR1, GSTR3B and CMP8. All these cases, all the entries should be nil, then only through SMS it can be filed, otherwise normally it should be filed. And then next one, QRMP scheme. To whom this QRMP scheme will be applicable? QRMP is quarterly return and monthly payment scheme. If aggregate turnover of a person during previous year does not exceed 5 crores, then QRMP scheme will be applicable. GSTR1 they will file quarterly by 13th of the month following every quarter, and 3B 22nd or 24th of the month following every quarter. And monthly they will pay the tax for the first and second month. So by 25th of the month following every month, either under fixed sum method or under self-assessment method. And B2B invoices, they can add in IFF, invoice furnishing facility, on a monthly basis by 13th of the month following every month, but only optional, it is not mandatory. Then QRMP scheme is GSTIN wise, which means that I have 4 registrations. Few registrations I can go for monthly returns and few registrations I can go for quarterly returns. What is the time frame for opting in? So within 1 month after commencement of the quarter and 2 months before commencement of the quarter. If the quarter commences from April, so then 1 month after, by April 30th, 2 months before, so February 1st, 1st February to April 30th, they can go for QRMP for that quarter. Condition to obtain, last return should have been filed. And next one, they have 2 methods, fixed sum method or self-assessment method. Fixed sum method, they need to take previous quarter GSTR 3B liability into 35%. They will pay as liability for first and second month. If the previous month 3B they have filed, then they will take 100% of the liability of previous month 3B. Self-assessment means they will calculate on their own. And mainly here, interest computation is important. That is, say this, tax with respect to the first month and second month not paid by 25th of next month. Whether it is FSM or SAM, they have to pay interest at 18% from 26th of the next month till the actual date of payment. Then difference in the liability for first month, second month. First month, second month, say there is a difference between actual tax minus tax what they have paid under this method. If it is FSM method, no need to pay any interest. If it is SAM method, on the difference they need to pay interest at 18% from 26th of the next month till the date of payment. Then GSTR 3B for the quarter filed late. So 3B for the quarter should be filed by 22nd or 24th. So therefore thereafter till the actual date of filing 3B they have to pay interest under both the methods. Okay. Then this late fee for delay in filing returns. Remember, for GSTR1 and GSTR 3B there is a late fee. What is that? Nil return means 10 rupees per day subject to maximum 250. All these are under CGST. The same amount is payable under SGST. So nil return 10 rupees per day subject to maximum 250. Other than nil return, if aggregate turnover during the previous year does not exceed 1.5 crores, 25 rupees per day subject to maximum 1000. And aggregate turnover exceeds 1.5 but does not exceed 5 crores, 2500 per day is same. And if aggregate turnover during previous year exceeds 5 crores, 5000. So mainly in MCQ they will be testing this. GSTR 5, 5E and 6, normal, nil return 10 rupees, other than nil return 25, maximum is 5000. GSTR 7 and 8, 7, 25 rupees per day subject to maximum 1000, 8, 100 rupees per day subject to maximum 5000. GSTR 4, so nil return, so GSTR 4 is just like GSTR 1, nil return 10 rupees per day subject to maximum 250, other than nil return 25 rupees per day subject to maximum 1000, that's it. And GSTR 9, 9B, 9C, annual return. So this is very, very important because it's an amendment for this exam. GSTR 9, 9B and 9C. Aggregate turnover during the previous year does not exceed 5 crores. Then 25 rupees per day subject to maximum 0.02% of the turnover. If it exceeds 5 but does not exceed 20 crores, it will double 50 rupees per day, but the maximum is same. 0.202% of the turnover. Suppose if the aggregate turnover exceeds 20 crores, again it will double 100 rupees per day, maximum will become 0.25%, not 0.02, 0.25%. So this somehow you need to remember, okay. Then rectification of GSTR1, GSTR3 be same. Time limit is what? 30th November of the succeeding financial year, or date of filing and return, whichever is earlier. Then GSTR1, how the details should be reported. B2B supplies always invoice wise should be reported, whereas B2C, if it is intra, consolidated fully. If it is inter, invoice value exceed 250,000 per invoice, invoice wise. Invoice value does not exceed 250,000 per invoice, state wise consolidation needs to be done. Okay. Then the next area that we have is e-way bill. So e-way bill is a document that should be generated before movement of the goods, and it is not applicable in case of exempted goods, only in case of taxable, and that too the value of the goods, taxable goods, should be greater than 50,000 including GST. So if the value of goods including GST is does not exceed 50,000, then e-way bill not required. So it should be more than 50,000. While calculating 50,000, GST should be added. But in case of goods sent on job work and handicrafts, even if the value does not exceed 50,000, e-way bill is required. In e-way bill, there are two parts. Part A contains the details of invoice, and Part B contains the transport details. There is a validity for e-way bill. Once the e-way bill is generated, it will be valid for a period. That is, if it is like over-dimensional cargo or multi-mode transportation, where one leg of the journey is by waterways, then 1 day for every 20 kilometers are part thereof. Suppose in other cases, 1 day for every 200 kilometers are part thereof will be taken. Then the validity of the e-way bill can be extended after its expiry. Within 8 hours it can be extended, and the validity will always be counted from the midnight of the day in which it is generated till the midnight of the next day. Then some FAQs. When e-way bill is not required, if it is non-motorized vehicle, bullock cart, horse cart, etc., then goods are transported between customs places, airport, port, land customs station, etc., or transit cargo to Nepal and Bhutan, or if defense goods we are taking, or empty cargo containers, or we are taking goods to a weighbridge where the weighbridge is within 20 kilometers, then goods transported by rail which belongs to government. Then so transportation of certain goods like LPG for household, that is red color cylinders, kerosene oil under ration shops, postal baggage, natural or cultured perils, jewelry also not required, but other than ornamental jewelry. Ornamental jewelry, so what is that? Imitation jewelry is there, na? Imitation, not gold jewelry, imitation jewelry, that requires e-way bill. And used or personal household effects. Whether e-way bill is required if movement of goods is not for supply, yes. Whether the movement is for supply or not a supply, e-way bill is required. And whether 50,000 limit is for taxable goods or exempted goods, only taxable goods. While computing invoice value, GST to be included. Who will generate e-way bill? Suppose if the supplier is registered, supplier will generate. Supplier is unregistered, recipient is registered, then recipient will generate. Both are unregistered, transporter will generate. Or either supplier or recipient can enroll as citizen of India and they can generate. Whether a transporter is required to generate if supplier has not generated because the value does not exceed 50,000, but cumulatively all these goods transported in the carriage exceeds 50,000, yes. Transporter is required to generate individual e-way bill as well as consolidated e-way bill. Blocking of e-way bill, if you are not filing returns, if I am not filing returns for consecutive 2 tax periods, GSTR1 or 3B or CMP8, then my e-way bill will be blocked for outward supplies. But for my inward supplies, e-way bill can be generated. For my outward supplies, it will be blocked. So then next, in case of bill to ship to transaction, 1 e-way bill is sufficient. We can update multiple vehicles in the e-way bill. And part B should be updated within 15 days from updation of part A. Means once the part A details are updated, within 15 days the vehicle number should be added. Then e-way bill should be accepted by the recipient within 72 hours from its generation or delivery of goods, which may be whichever is earlier. Now say this, whenever there is a movement of goods, if it is taxable goods, definitely e-way bill required. If it is under supply, tax invoice plus e-way bill. If it is without supply, delivery challan plus e-way bill. If it is exempted goods, under supply, it is bill of supply. If it is without supply, it will be delivery challan. Okay. Then the last area, GST practitioner. In this, they have not asked any question so far. If at all they ask, what is the role of a GST practitioner? What are the activities that can be done by a GST practitioner? They can apply for registration, they can file returns, they can act as authorized representative, they can apply for refund and make payment of tax, even they can furnish information for generation of e-way bill, or furnish details of challan for goods sent on job work. They can make application for amendment or cancellation, or they can file intimation for opting for composition scheme or withdrawal from composition scheme. This can be asked. Okay. So with this, we completed the entire portion. We completed the entire portion, like a overall view, like every chapter, but important areas which is must for revision we have seen. Okay. Then apart from this, so few queries. If you have any queries, you can just post it. So I'm just seeing the queries of others. So these notes, this is actually That's It book. You can get it from courses.tarunraj.com. It's a e-book, 99 rupees. You can get it. And for composition scheme, how many annual returns are applicable? Only one annual return, that is GSTR 4 by 30th April of the succeeding financial year. And yes, this video will be available after live got over. It is still there, don't worry. Till tomorrow afternoon it is there, you can watch it. I have a doubt regarding the point given in composition under illustration 3, the note given regarding RCM payment. Can you explain? That is simple. Whenever we are under composition scheme, when we have some inward supplies under RCM, on that we need to pay regular rate, not the composite rate. On inward supplies under RCM, we need to pay the regular rate applicable to the RCM, not the composition scheme rate of that 1% or 5% or 6%. Okay. Yes. So that's it. Fine. Fine, guys. So focus on these areas. And how to find a company's body corporate. See, simple, body corporate means private limited company, public limited company, or any body under any law. Body under any law means SEBI, IRDA, ICI, ICMI. Okay, these are all examples of body corporates. Private limited company, public limited company, or any body under government for any law, under any law. Okay, that is called as a body corporate. And then business entity means any person engaged in business, even individual also will be coming under business entity. And remember, LLP is not a body corporate in GST. In GST, LLP will come under firm. LLP will not come under body corporate. Okay. And then one example for statutory obligation which is mentioned in 17.5. So as per Factories Act, so they have to mandatorily provide food to the employees, so to the workers. Because of that, the company has received outdoor catering service, they can take ITC. Mandatorily, they have to provide rent-a-cab facility as per government order, for which they have received rent-a-cab service, they can take ITC. That is the meaning of that. Okay. Then banking company, 50% ITC available. Yes. So what banking company will do is that first they will be taking like two options they have. Proportionate ITC. Proportionate ITC means total ITC into taxable turnover divided by total turnover. That is proportionate ITC. Ad hoc ITC means total ITC into 50% they will take. But blocked credit and non-business they will not take. And remaining 50% they will take. But inward supply from distinct person, 100% they can take. That is that. Then MCQ video for practice manual questions, you can see it in the previous May 23 fast track batch I have uploaded. There you can find. Okay. Sir, maxi cab service is exempted. What maxi cab? Like transportation of passengers by maxi cab is not exempted. That is taxable. We don't have any exemption. Okay, fine. Yeah. So I don't want to waste your time. A book post exempted if the weight is less than 10 grams. Book post is exempted if the weight is less than 10 grams. And I don't want to waste your time. So therefore, please prepare. And those who are having doubts, you just come to the Telegram group GST. So Tarun sir GST @ Tarun sir GST. Like that one Telegram group is there. We have given the Telegram link also here. So you come into @ Tarun sir GST Telegram group and you post your queries. I will reply to your queries. Okay. Thank you. All the best. Prepare well and do well. Definitely you are going to get good marks. Okay. So I will be waiting to serve you all in CA final. So all the best once again. Hearty congratulations, you are going to complete CA Inter. Believe in that. Okay. So we will meet in CA final. Okay. So please update me once you get the result and I will be so happy to hear the good news from you. So do well and prepare well and go for the exam. Thank you all.